last month I did essentially zero work for Amazon. I think maybe like 2 hours total, where I just went into my BeCool account, which is my repricer that I use, dropped some of the prices because I hadn't sent anything new in. But even without sending anything in for, I think it's been like 2.5 months now. Let me double check. Close batches. Oh, yikes. Almost 3 months. The 17th of January was the last shipment. This one, I didn't even do anything on the 2nd. I just made that for a video. So it's been well over 2.5 months without doing anything for Amazon. But in January, I sent in a ton of inventory, like 2 months worth of sales. So we're now depleted from what those 2 months would have been. Let's take a look at what my sales were in the month of March and see how much I was still able to sell and what that turns into in terms of take-home pay. And even though this month was not enough to sustain what I want, it did actually have some pretty good outcomes because I wasn't sending any new inventory in and really focusing on getting rid of old stuff. So real quickly, let's just actually head into the Amazon seller app. As you can see, I haven't opened it in ages. I think it's been a couple weeks since I've even actually done anything in this app, so I have to relog in. We'll be able to see my totals for last month, how much I actually sold. Obviously, just on this first page, we're seeing the first couple days of April. My light died. I thought I had 2 bars of battery left. But as you can see on that screen, I have down like 60% over the last year or even last month. And I've only been averaging like $150 a day of sales, which is obviously super bad, but it's also $150 a day in sales. And I haven't done anything for Amazon in almost 3 months. Luckily, this is one of the things I wanted this light for, so that I could actually use it while it is plugged in. I should probably turn the inverter on though. And now, let there be light. Please? What the heck? Okay. Oh, hello. So heading back over here, we could see that today so far I've sold $94, 9 units, but only about $150 a day. Actually less, $120 a day-ish, even with some of these bigger days being around $250. But if we go back to year to date, we'll be able to look at it by the month. We can see a massive decline. I sold average of around $10,000 in January and February, and then since I didn't do any work in February or March, that definitely declined a lot. April should kick back up as I'm going to start doing some more in sales and actually sourcing and sending in inventory. Let's not talk or ask questions about whether or not that shipment that I have in the back of my van is still in the back of my van that I've been talking about for a couple of videos now, because that would be a really bad thing to talk about. But essentially, if we look at March sales, we can see I sold $5,834 in March, which over 31 days is $188 a day. Not great, not the worst. And if we head over onto my computer real fast, we can really take a look at what that breaks down as in terms of daily sales, because there were a few days where that really shot up, and that's because of some things that I did, which if you're having bad sales and you haven't done a lot of sourcing, you can do this too. But over here, I already opened my business reports for the month of March. As you can see, the 1st through the 31st, 372 orders of 436 total units, amounting to that $5,834. Average sales per order item was $15. I do want to pump that up a little bit as I start to source more, trying to source higher price items. I talked about that in this video if you're interested in how I'm changing my sourcing. But if we look at my sales compared to last year, it's way lower. Last year I did $9,500, but I was also sourcing a lot. And this year I did about $5,800, which isn't as small as I thought it would be. So if we get rid of this, we could take a look at the actual sales over this period. And I did, like, on the first day, $287, kind of averaging around that $150 mark. Really low day. I think that's my lowest in a long time. $28, $57, $36, and then just a couple days ago, another $64 day. But right here I had a big spike, $534.35. And the one thing that we could take away from this month of sales is that even if you have low sales, you might have a lot of inventory at Amazon. If you use InventoryLab, the way you can check this is going into InventoryLab, into Inventory Overview. And one of the first things that shows up on this dashboard is this FBA inventory total on-hand buy cost. Right now it's $3,100.97. At the beginning of the month, it was probably closer to about maybe $5,000. So I wanted to drop that as much as possible, knowing that if my inventory's been there for 3 months and it hasn't sold yet, it's likely not going to sell at higher prices. So I want to just get it back at cost or even for a loss so I can get some cash back in my pocket and pay off inventory, which is something that we'll talk about towards the end of the video. And so to do that, I just went into BeCool and dropped a bunch of prices down to break even, especially on stuff where I filtered for, let me show you actually, make life easier. If we go over here into listings, active listings, we can actually sort by listings. Actually, we don't even have to go there. Go down here, competition below the minimum. I share all this in the video where I break down exactly how to use BeCool, as well as I have an announcement and a giveaway. If you don't use BeCool yet and you don't have a repricer, go watch that video. At the end of it, I have a giveaway. You still have time to enter if you're watching this video now. You have about another 9 days. But if we go to this competition below minimum here, we'll look at all the listings where other FBA offers are below what my minimum price is set at on BeCool, meaning that I essentially have no chance unless they sell out or someone decides to just raise their prices to actually get a sale. And I have all these listings here. So what I did was actually went in here, sorted by quantity, quantity. And whatever my highest quantity items were, I dropped prices to right where the competition was. For instance, this top one right here, you can see I dropped the price to $23. It was around $30, but the competition now dropped it to $16.99. And so now, because I have 12 of those, and it's something that I don't really expect the price to go back up a lot on, I can drop that down to $16.90 again, and hopefully I'll be able to sell out of those 12 that I have. If not, it's not the end of the world, because the price might go back up as they come back into season as a fishing item, but I want to get some money back, even though I'll be losing a lot of money because my price is now essentially my buy cost price. I would rather get that money out of my inventory so that I can buy more inventory, because this stuff is just going to sit at Amazon not selling at all, which is not good. So going into Be Cool and doing that really helped me to actually not have the worst sales ever. I probably would have sold, especially at the end here, you can see a pretty big jump, 534, 351, 303. I was averaging like $300-ish over this week because I priced a lot of my inventory to actually sell. And if you're having bad sales or just a bunch of inventory still at Amazon, I would highly recommend getting some money out of it, as I explain the math behind it in this video if you haven't watched this already. I recommend this video in a lot of places because it's a concept I don't think a lot of new sellers specifically grasp, that actually selling anything is so much better mathematically and like financially than waiting for the price to go back up, because in the time that you're waiting, you'll be able to flip multiple other items. As long as you're sourcing and not doing nothing like me for 3 months. So essentially for the month of March, my buy cost was $0. That is if we're doing cash-based accounting. I've talked about cash versus accrual, and the difference is that accrual counts your buy cost or your cost of goods sold when it actually sells. So that's what InventoryLab does. But I use cash-based because that more accurately reflects my cash that's in my account, what I have to work with. But it's not the best indicator of return on investment, because you essentially write off everything way before it sells, which is not good accounting practice if you really want to be specific about how your inventory is performing. I just care more about the cash in my account. So if we go over to InventoryLab, we can go over here to reports, profit and loss, and go over here into monthly March to see what this actually breaks down at in terms of fees. The first thing that we'll notice is that the sales are a little bit different. This is because of how Amazon versus InventoryLab do their API. Pretty sure InventoryLab takes it based off finalized sales, so stuff that ships out of Amazon instead of the sales that happen on the same day. So I might have had good sales at the end of February that were reflected at the beginning of March, but it's close enough that I don't really care too much. We can see my sales were $6,000. My refunds were $450.69, which is a pretty decent amount. I think that is like 7.5% is what that ends up being, which is a lot of refunds, and probably a lot of that is just apparel, because I had a lot of apparel left. Not super worried about that, because refunds are just something that I try not to spend too much time worrying about. It's just going to be something that you have to deal with on Amazon. And so after all said and done, and InventoryLab takes into account the refunds, reimbursements, all these other things, that gets down to $5,738 of income after returns. And then down here we can see the cost of goods sold, which is $2,622.56. Like I said, this reflects what I actually bought all the items that sold in this month for. So those 400 and something units that I sold, I purchased all those total for $2,622. The thing that's important for me though here is that since I didn't actually spend any money on inventory, that $2,600 is essentially profit for me this month if you're doing cash-based accounting, or instead of thinking about it as profit, because some people get upset when I talk about it like that, even though technically it's true based on cash-based accounting, you can think of it as cash flow. Because after we look at that, and then we subtract out all of the actual fees that happen on Amazon, like the referral fee of $900, transaction fees of $1,600, inventory fees of like $45, so we can see I have a lot of storage fees because inventory is just sitting at Amazon, and then other random expenses, we can see my profit was only $468.67, which is really terrible on what, $6,000 of sales. Let's just say the $5,800, $468.67 divided by $5,800 is 8% profit. And if we look at that in terms of a return on investment on the inventory that we bought, instead of being divided by 5,800, we can divide it by 22.56, and that is only a 17 or 18% return on investment instead of the normal like 50 that I'm looking to get. Oh my gosh, that's so low. But like I said, this is much less important to me because that $468, instead of dividing it by that 26.22, if we add those together, then we get $3,091.23, which is positive cash flow coming into my bank account that I can use to pay off old inventory debt that I had. That's why I prefer cash-based accounting right now, because it more honestly reflects what my cash situation looks like, because since I didn't spend any actual money on inventory, and even though my profit technically, if we're using COGS correctly, was only around $500, what I feel is my profit is around $3,000, which is the main benefit of me not buying any inventory this month, even though it would have been more beneficial to actually make more money. And that main benefit is the fact that now I am not going to have to worry about almost any inventory debt at all, especially after I get this stuff that's in the back of my van sent into Amazon. The money that I was carrying on credit cards as debt for Amazon is not going to be a worry anymore, because all that $3,091, I was able to take some of it out to pay myself, and we can actually look at that on my target allocation spreadsheet, which I share in the video, the spreadsheet that runs my business or runs my life, whatever I titled that one. But we can look at March and see that this is all the money that I got in terms of payouts from Amazon, which is about $3,000. Yeah, almost exactly. The total payout was $3,145.96 that I got paid out from Amazon. And we can see how that's all broken down here. And so this is how this all was allocated in my business that I got from my payouts. Even though I wasn't able to actually send in more inventory to Amazon or anything, I'm still gonna pay myself out of this. So from that $3,100, $3.50 goes into my profit account, which is essentially our fun money account. We're gonna use to do things like getting an Airbnb for a weekend since we live in a van to kind of relax. Our owner pay account is $471. That's a lot less than the over $1,000 that I normally put in, but our owner pay account has multiple months funded. And if we look down at how much YouTube made, we did pretty good there, and I put in about $800 more than I expect to put in. So we have a wash there, not worried about that at all. For taxes, we have $154.26 because that is 30% of owner pay plus profit. That way, come the end of the year, I have oversaved in our tax account so that I can take a bonus, which we just did this year, which I talked about in my tax video, and we're able to bonus ourselves like thousands of dollars, which is awesome. And I'd rather do that than underpaying taxes and having to scramble at tax time. That way you get used to living off less money and you're able to actually splurge on the things that you want after having saved all that extra. Operating expenses for the business is $154.15, which is not great. I like to keep that over $200 because of the capitalization of some of the yearly expenses that I have for things like InventoryLab and Be Cool, but $154 will more than pay for what my monthly actual expenses are because those things I paid for on a yearly basis already. And then lastly is the most important one. I put $2,331.05 in inventory. I guess there's also retained earnings, but we don't really think about that. But $2,300 goes towards inventory without me spending anything on inventory. So it's a net $2,300 reduction in the amount of debt that I have. Honestly, this is the first time that I've looked at all this stuff this month, and I'm kind of pleasantly surprised with the results, but I'm ready to actually get back to work and be better about that. So if there are any videos that you want to see about Amazon stuff or anything else in general, let me know down in the comments. Otherwise, definitely check out this click playlist about how I manage my cash flow so that I have a system that easily makes sure that I'm paying off a lot of inventory and paying myself. That's just 2 videos in that one. Or down here, check out my monthly income reports to see how January and February went, because basically all 3 of those months are summed up by what I spent in January.